We talked about the biggest, greatest market expansion in U.S. global world history last week. Now let's get into the details. Stay tuned. Hello, welcome to the Wealth Transfer. My name is Terry Saka. I am the Chief Strategist, and we missed Dr. Charles Vance, but we do know for those that are used to watching him with me, he will be back along as well. And we do want to get in, though. I wanted to take a break here for a few weeks and get into very specific details of the U.S. market system and global economy, but they're data form. It's really nice visual graphics to let you see what is really going on, because they're not telling us out there, and we're going to get right into it in this program. Before we do, let me get in and let you know, how can you get a hold of us? Go to cornerstoneassetmetals.com for anyone looking to purchase silver or do IRAs. You can also go to Cornerstone Asset Metals on Facebook, and there you can keep up with the community as far as news posts or financial posts that we do. I do those financial posts on Terry Saka AAMS on Twitter. And my favorite is Instagram. Beautiful photographs being put up of God's money, as well as 1-minute videos of great little SERPs of information that we do that I think you'll find very exciting. Go there and like us and be a part of the community viewing that. We appreciate it. So I want to get right into the details now. Now, we explained a little bit last week about the world reserve currency, how that the United States market system has actually gone into the largest bull market expansion in U.S. history. And they really say in kind of a comical way, this goes back to literally the 2500 BC when Egypt was building the pyramids. The point being, we have printed so much money, and we are in such a large, lengthy expansion of that money, we're due for a recession. Here's the problem, folks. A recession this time won't be a recession. And the 2008, what they call the Great Recession, wait until you see what that brings. Because this next one around, and I don't think they're going to be able to handle it, because there's too many geodynamics playing and attacks on the dollar playing out. And I say that because a lot of people don't understand President Trump and why he's attacking these trade wars the way he is. But the mainstream's not telling you. But folks, President Trump, out of anyone, knows very well that the Chinese, the Russians, BRIC nations, and others, Iran, you name it, are going after the dollar's hegemony, meaning authority and superiority in global finance. They're going after the petrodollar. And the petrodollar was what happened in the 70s when the United States, now you remember that was Nixon, of course, but in the 70s when the United States told Saudi Arabia, who was head of all the oil and OPEC at the time, you make all oil be purchased in a dollar, in turn we'll protect you militarily, and we're off. Since then, of course, everyone needed dollars, the demand was there, we were able to issue debt, and we have what we know today as the American dream over the last 45 years. Problem is that petrodollar was everything. When people needed our dollar, it was good. We could print and it wasn't a big deal. Yes, we had expansions and contractions and we had recessions. This time's a little different. For the first time in 45 years, we are now seeing a massive challenge to the dollar's superiority. The hegemony, its authority, and all transactions of trade and finance. And that's a big problem. And the president knows we have to lower the dollar's value. The dollar can't stay strong right now. It's destroying the emerging markets, and we need to lower that. And of course, the dollar crashing down is also going to be extremely beneficial to silver and gold. So I want to get right in, because the important thing to recognize is where the market sits right now. Beyond the largest expansion, this image here of free cash balances versus the S&P is pretty astonishing. Because if you look at the blue line, that's the actual S&P itself. Then the orange and the green, it's inverted, but the orange and the green show negative, meaning credit and margin, and then cash. If you noticed where the green little lumps are, that is the 2008 market collapse and the 2000 9/11 event. And if you notice in 2008, a lot of people went to cash. Since 2008, on that long green streak there, you see the blue line riding up, that's in the market system, and then you see the orange exponential expansion. That mountain, folks, is credit. That is margin, meaning if I have $100,000, margin is this. If I have $100,000 in the stock market, my stockbroker talks me into borrowing another $100,000 with interest and go in and buy more stocks because you're going to make more money. You have an unbelievable amount of credit and margin in this market system. Hundreds and hundreds and hundreds of billions. And I just want you to visualize this. If you have 10,000 cattle going through one gate, do you think they're all getting there if there's a pack of wolves behind them? No. And who are the pack of wolves? Well, they're kind of the bankers, the fiat people, right? They're not getting out. There's going to be a lot of trampling going on. And if you knew the new law that they passed a couple years ago, in the stock market, you cannot sell what they call stop losses. You can't put stop losses in place, meaning I call my broker today and I say, I want a stop loss in for Google, and if Google goes down, I want it to sell off at a certain point automatically without me having to call you. That's what we used to be able to do. Well, today we can't. Now you have to actually call your broker. And folks, I'm telling you, good luck getting a hold of your stockbroker when they have 200-300 clients and the market's crashing. I implore to at least be diversified is the key. That kind of margin is what I call panic investing, meaning they're panic investing toward the top end because they're trying to make profits. But on the other end, when the market really sells off, not these corrections we've had, but really sells off, which it's coming, it's just part of the cycle of life, who's going to get there first? And if you're caught behind, what are you going to lose? 30, 40, 50% of everything you've made? You'll end up farther back than in 2008 losses. And the buying power being down, what's that going to do for you? So the one thing that is kind of important to understand is in the realm of housing. University of Michigan consumer expectations for household income growth. Now, what I find interesting about this is the income growth versus on the bottom there in the red, real average hourly earnings year over year. Look at the blue line in expectation. It completely separated from the green. The green is in real average hourly earnings. And so if you've noticed, number one, since what was that, 2016, it was really in about 2015. We really had started into a massive recession. The global economy started crashing all over again in 2015. Oh, and mind you, for those spiritually in tune that were back then, that was the Shemitah. And that Shemitah took place. So keep that in mind. But since then, you notice the blue line and the green, they separated. Meaning our expectations, meaning the media was misleading you, thinking everything was so awesome. Do it. Get involved. Go for the risk. But look what actually happened. Actually, since 2015, our year-over-year average earnings have dropped. Now to the point where we are today, we are negative. Our earnings are going backwards. Now, I know what the president's saying. Some industries have reaped some benefits, but overall, we're having trouble. If our expectation is way up here, but reality is down here, we better get a reality check. And the best way to get a reality check, the most important thing you can do for yourself is to be educated. And you need to research a little bit, and if not, talk to the right people. It's a good place to get started if you want to talk to the right people.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. Cornerstone did tell me that they do have representatives standing by if you'd like to give them a call right now during the program or after the program. I do encourage, go to Cornerstone and register for information. They send out a fantastic packet of the current condition of the global economy and why diversifying intangible assets is so important. I think you would benefit from that. But I know I did show that. I'm going to go back to this one more time. This chart is the expectation we the people have of what's going on in the economy and what's going to happen to our income. Now this is income growth, mind you. But the green line shows the real wages. Now remember, we have inflation, buying power loss on this. So even though we may be receiving a little more money, it's not equating in the actual economics. That is the reality. The blue line shows what the media has been hyping to you and letting you feel that everything is awesome. Now, President Trump's done a great job of helping us do that too. Problem is, it's not matching up. He knows this. That's why he did the tax cuts. That's why we're renegotiating trade globally. He knows the world is after our dollar supremacy and authority. And we need to renegotiate this playing field now in order for you, we the people, to have any sustained buying power in the future. So just know the mainstream media is giving you so much misinformation or half-truths, you better be careful, and if you care. And I say if you care. Obviously we all do, right? To some extent. I mean, it's your money you're saving. It's your retirement. But for whatever reason in America, we have a tendency just to turn it over to our financial advisors, and we go into these mutual funds in the market system, and we don't really know what we're doing or what we're involved in. And that's a very dangerous thing. Now, if you want to speculate, want to play some Bitcoin, if you want to throw in a stock, I get that. I'm talking long-term preservation protection of your retirement account. Tangible assets would be the way to go. And the only problem with land, it's not as liquid. That's why silver seems to be the best. But go back into our average hourly earnings, for instance. This is the real average hourly earning year over year. Now look back just to 2011. This was after we really had the major crash of '08, and the earnings were just horrible. People were losing their jobs, and prices declining. Only jobs being created throughout Obama's presidency was part-time jobs. So, you know, President Trump is superior in the economics for sure. But if you've noticed, since really 2012, 13-ish, we haven't seen that red, but besides one blip in our hourly earnings. We're actually decreasing. Since 2015 of the highs, where you see that big green mountain, all the way down to the right, our hourly earnings are decreasing. That's very problematic in the largest expanding time in the history of the market system, and one that you better take check to when it comes to your savings in retirement. And the reason I keep bringing that up, it's where we're storing our wealth. Why the dollar? Dollar's strong, right? Dollar's doing great. We're doing awesome as a great economy, a great nation. Problem is, the dollar's not like you think it is. And actually, the strong dollar really hurts us. And, you know, we're in direct conflict with Larry Kudlow, who's running that department for the president. He believes a strong dollar is the way to go, but not with the types of debt and swap line loans to the emerging markets and all the other factors included. I just totally disagree. I think right now, as the president has stated, a lower dollar would really benefit the American people. Problem is, the world is going into dollars to it's like a safe haven type of thing. So the dollar's been rallying. It's a false rally, folks. But I want you to look at this. This is the dollar index, and I call this the 20-year. This is a 20-year average. I'll go back to in the mid-90s. Actually, this is in the mid-80s. Look how strong the dollar was in the mid-80s. That was real dollar strength, because back in the mid-80s, we really only had a few $100 billion in debt, where today we're 21 trillion in debt. Back in the 80s, when we had that strong dollar value, we were the world's largest creditor nation, where today we're the largest debtor nation in the history of the world ever. Back in the 80s, the baby boomers were just beginning to earn money and pay taxes, and today they're retiring and taking benefits that we don't have money for, Social Security and Medicare. So the dollar's strong back then because it was our new currency, you see. In the 70s, we started a new currency, 71. But you notice the red trend line. It's violated that trend line just a little bit. But it's a false narrative. And I'm saying we are on a sustained slope downward in dollar value, which will impact the stock market. But the good news is, for those that are there, a weaker dollar is going to be exceptional for this. So let me make sure we get that right, huh? But that's the reality of the dollar. So when they're showing you that the dollar is strong, keep it in perspective over the last 20 years. It's declining with the attack on the dollar supremacy by the Chinese and others, and the tremendous amount of money printing and debt we've accumulated. Folks, we're not going that much higher for long, and you will see the surge back into tangible assets, especially gold. Now, the average in the global, let's just do it this way. The average of global stocks is currently down right now about 14% from the January 2018 high. The January 2018 high is when we in the United States also were at the high. It was in 26,000 range in the Dow. So far, since January of 2018, we have not gone to the high. And what you're seeing here in this chart shows in 2003 and 2008, and then in 2015, you see the decreases. The stock markets decreased back in that day 43%. In 2008, the markets collapsed 62%. Then we had a small collapse in 12 for 27, another one in 2015 for 25%. What I'm getting at is when we get at these tops, they blow it down. Right now, the global markets are down 14%, and I believe that's just getting going. Now, the only thing that could change this equation is if the president and their team end all trade wars with China and these other countries, and we all come to this great grand plan, these stock markets will boom into a whole nother parabolic level. Not so sure that's happening, because we can't. We can't give it away. We just can't. Important thing is to hold ground. The president knows the days are numbered for the reserve currency of the dollar compared to our debts. So for those that have IRAs or 401ks, have cash sitting around that you pulled out of the market system, this is a perfect time to get diversified into the market system for a tangible like silver, because silver, to double your money from here, just has to go to $32, and $32, it's been at that price 12 times in the last 10 years. It's going back there. So what a great place to diversify now while we're at this kind of point in the market system. So I encourage you to really be educated, get informed is the most important thing, and look what you can do for yourself for the future, and do it now. Take down this number, look at this information.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. So another one that I want to go into besides the showing in the stock market and in the earnings is the currency itself. The volatility of the currency is at a 10-year high. Now, this is interesting because if you've noticed, from the 2000 collapse up, and then you got the red circle, that's China and the World Trade deal. Then you come down to 2008 bottom, and then it skyrockets up, and that's known as the Great Financial Crisis. And then we come all the way across from 2008. Look at the peak we're at today. And this is U.S. tax cuts and trade war causing this kind of expansion in debt. But this is very telling to me because it gives us the context that every time we hit those high peaks, the system's collapsed. And we're at the high peak. I could go up a little bit, but we're close enough. And that's something we need to make sure we're paying attention to. If you'll notice the theme over this program next week and even last week to a bit, we're getting near a top. Now, it could keep going a little bit, folks. Who knows? Like I said, they could do the trade wars. But we are so close to a massive correction. And if it doesn't go down right, when you look at places like Italy and others, there is going to be a huge collapse. That dollar will tank. That stock market will collapse. And where are we going to be if we're all in on the stock market? That's where being diversified is important. But here's a good way of looking at it. You're working, or if you're not, you're retired. Those dollars you have in the savings, it's working for you. That's supposed to be the goal, right? So if you've noticed the average 23-year timeline here from the 60s to the 80s, look in the first big hump right to the 2000 collapse, in the middle, the 2008 collapse, and look from the middle 2008 collapse, how huge the expansion has been. From the bottom all the way to the top where we're at today. This is hours worked to buy an S&P 500 share. So you are having to work exponential amount more just for the same share. Does that sound like a good value to you? That's like paying $20 for a loaf of bread because it's the last loaf instead of the average $3 or $4, right? So be cautious of that because you're working really hard right now and the shares, the value of the market system is very, very poor. Now, these are sell signals. And it happens to be only 5 times in history this particular index did it. These indicators are based on a ratio of stock prices to the price of a medium new house. This comes from Gray Cardiff. It was pretty sound, interesting analysis. But think about this. For a medium new home, and we're going to get into a lot of this because the real estate market is a big part of what we are as Americans, right? The red is high-risk zones for the stock market. The green are low-risk zones for the stock market. And since 1895, it's a long time, folks, right? It's in the horse and buggy time. We've only 5 times hit this red zone. In the recent history anyway, the only time we did that was in the early 2000s where we just blew apart. That whole 9/11 was bigger than people ever realized. The 2008, we were still in a safe zone, and yet we had these derivatives that collapsed us down. And then you see the expansion we've done since 2008 on the right side of this chart, and you notice where we're at today? We're touching the red. So it shows you that the median new house price compared to what we are at, and the stock prices in the price of median new house, it's not good. It's meaning something's wrong, something's coming that's going to take away that value. So I encourage people, if you're looking into real estate, make sure it's important and not just for your own desire, because you may get a better deal a little bit later. So another thing that I want to touch on, if we're going to stay in housing, let's complete this segment with the housing numbers. We all know housing is slowing down to some extent, and maybe you don't. And if you don't, it definitely is slowing down. Across the board, there's housing issues. This is the Case-Shiller Home Price Index, and I just want you to focus in the middle there, after the 2008 collapse in the middle where it plateaus flat. Ever since then, we've steadily been climbing in that index of prices to the point now we are at the high of 2008. Now think about that for a minute, because I remember having people tell me that we are, in 2005, 2006, why aren't you buying houses? Why aren't you flipping homes? And this is a great time. Everybody's making money. I got 2, 3 properties going on. It's great. I said, did you look at the charts? We're at this point now. It could be a year or two from now. I don't know. It could be tomorrow. But we're at this point now where this thing's coming down. And as they were going in, I was staying put. And of course, this is where this kind of comes in. And look what happened. Most of the people I know lost a fortune in 2008 real estate. I know a billionaire who lost almost all his money because of leverage. So you see, the house prices are kind of important, especially when you see the prices now. And we thought the 2008 market explosion in real estate values was way overdone. Folks, we're higher now than in 2008. Think about that. You see, another peak. And this is why we need to stay focused on it. And I want to go back to this one chart here. This is University of Michigan home buying conditions, meaning it's a kind of a survey of the condition, is it a good time to buy or not? How about that? The reds are the massive recessions. And you notice when we get to the peaks, then it kind of collapses from there. But look at where the conditions are. Horrible, horrible at the bottom of this measurement. Horrible. And yet they're out there pushing how great the real estate market is. So we have to keep things in perspective. And if your goal is to double your money, I want you to think about this. The stock market has to go to 50,000 in order to double your money. It's not even at the high for the year. The odds of that are pretty slim. Gold has to go to 2,600, but gold hasn't been there ever, so it doesn't mean it can't, but it'd be a little tougher. Yet silver, all it has to do is go to $32. It doubles your money from here, and it's been there a dozen times in 10 years. A dozen times. So what's more probable? So if you're looking to diversify right now, sitting in cash is dangerous because this is going to get depleted. You want a tangible asset and one that's liquid. It can be bought and sold, and that would be silver. So I encourage you to stay focused, stay with us, spread the word. Go visit us on Instagram and the other sites. And until next week, we'll get more into these details. Wait to see where this is going. God bless each and every one of you.